Hello friends, I plan to talk to you briefly about the Indian economy and the Indian stock market. The Indian economy is faring extremely well, both from a growth as well as from an inflation standpoint. Let's start with growth. From a growth standpoint, India is one of the largest and fastest growing economies in the world today. And it is a combination of factors which is pushing this growth up. On one hand, we are seeing a strong push for Make in India. It is being driven by policy measures like the PLI scheme. It is being driven by ease of doing business and a lower tax structure. At the same time, we are seeing a strong move of China plus one, and this is impacting a number of sectors in India. Costs in China have risen substantially, tariff barriers against China have ratcheted up, and environmental compliance norms have become a lot more strict. This, along with a diversification of supply chain, has meant that India stands out very favorably from a global manufacturing standpoint. At the same time, the banking system in India is in a robust condition. NPAs have fallen dramatically, capital adequacy has risen, and growth has bounced back as well. We are also seeing a strong rebound in the real estate segment. A combination of better affordability and the advent of RERA has meant that real estate also stands to do much better going forward. So India from a growth angle is doing extremely well. In addition to that, inflation in India is also at reasonable levels. Compared to what we see outside of India, where inflation has jumped very sharply, while inflation in India has gone up, we don't see any structural issues. Neither do we have issues related to a labor market such as in the US, nor do we have issues related to energy like in Europe. And we believe that inflation over a period of time will trend downwards, with commodity prices having corrected quite meaningfully. So India from a growth perspective and from an inflation perspective stands out, both from an absolute standpoint as well as from a relative standpoint. Now moving on to valuations, certainly the Indian market has done extremely well, and valuations and markets have moved up. But let us put this into perspective. The Nifty and small cap indices today trade at a 15 to 18% premium compared to the long-term averages. Investors who have a 5-10 year investment horizon will continue to do well investing in Indian equities, but need to reduce or lower their expectations from a return perspective by a couple of points to adjust for this valuation premium which exists today. We still feel that the Indian equity markets will offer substantial rewards going forward. How should investors navigate the current environment? We recommend to investors to follow a combination of SIP and lump sum investing. SIP should be done on a regular basis, keeping in mind one's long-term objectives, and should be done as early as possible. Lump sum investment should be typically restricted to when markets correct and present a more attractive opportunity. At the same time, investors must always keep in mind what is their asset allocation. At the end of the day, fixed income and equities give very different returns, and how much money we have invested in equities versus how much money we have invested in fixed income will be a key driver of overall portfolio returns. Thank you very much, and wishing everybody a Happy New Year.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.